All right, well, welcome to the fourth or fifth episode. We couldn't decide of Taking Stock, the fifth episode of Taking Stock.
You look better.
What's that?
You look better. Your face looks better.
Oh, yeah. So I want to apologize. My internet speed was somehow slow. So there was a werewolf segment in the last Taking Stock. It was a werewolf with bleached hair in the front. It was
bleached, yeah, you had bleached bangs at one point. That was pretty good.
Yeah. So here we are. Not only are we all quarantining at home, but now we can't even go into our yards because of wildfires covering the region.
When the air quality gets to 500, which I think is like 3 times as bad as Beijing, yeah, you probably don't want to.
Yeah. I did like 2 days of yard work and didn't quite realize how, serious it was. So anyway, I'm back inside now. So we're going to talk today a little bit about tech stocks, one of our favorite subjects. Talk about just how important they are, and one of the things that we've seen in markets recently is that there are COVID created real winners and real losers, and we're seeing the winners basically enjoy their time at the top of the heap. And we're seeing some of those losers, desperately try to adapt. So you've got some stories on both of those. So do I. Should I just kick things off? We'll look at the chart that just shows that sort of dominance of tech. So we all know that we've seen record highs in the stock market, but that doesn't mean that all the companies in the market have seen record highs. And here you can see, it's showing the S&P 500, and you can see that of the S&P 500, 185, 190 companies had positive returns, but most of the companies in the S&P 500 had negative returns, even though the market, all of these companies as a whole, are hitting record highs as an index. And it's just simply because these top 25 have had such tremendous returns, and they've really driven the returns of the market. Yeah. So although we're hitting record highs, that doesn't mean everybody has been doing well. So I know that you've got some examples of some of the companies that were in the losing end of that index.
One that wasn't very intuitive that I read the other day, I think this was in the Wall Street Journal, was a really popular teleconferencing software system called Slack. So the ticker is WORK, work. So at the beginning of the pandemic, I mean, if I told you that the most successful sort of workplace collaboration software company wasn't going to do that well, you probably would have looked at me, like I was crazy. But what happened was that Slack is sort of this third-party app, right? And Microsoft, which we're working through Microsoft Teams right now, is native to the Microsoft operating system. Well, Microsoft gives away Teams for free. And so Slack didn't, I can't remember the exact number, but they didn't grow their revenue and they lost money. And so if you're running a teleconferencing tech company and you're not making money now, that's a problem, right? So that's one company you would think of that would be a winner that ended up kind of being like a loser. But one thing we talk about with tech is, antitrust stuff. And so there's some stuff out of the EU where there's antitrust regulation against Microsoft for how aggressively they've marketed Teams.
But basically, when everyone went to work from home, they just realized all of a sudden, wait, we've got all this functionality already in Teams. We don't need Slack anymore.
Yep, and Teams is it's very cheap and often sometimes free, but Microsoft positions it as it sort of sits on top of all the other applications. So it's the giveaway that sort of gets people fully engaged in the ecosystem to use it. So they have a massive advantage that way.
Yeah, and I think we've all been enjoying using it. So some other examples, I think I think one of the things we've dealt with at the bank is, if we're all working from home, is there any reason that I couldn't work from Puerto Vallarta or Rio de Janeiro?
Yeah. Kajita, he didn't bite on this when I floated it by him. I tried. I was golfing with someone last week, and then I found another article where kind of like island nations. This was the Maldives, where these luxury hotels don't have vacationers. And so what they're doing is they're putting together like 3 or 4 week luxury work from tropical paradise vacation packages, including they include a personal assistant to help you. Your a beach bungalow. The picture was unreal. Maybe Shane can put it in here, but yeah, hotels are getting creative with how to get tourism dollars again.
Right, we're seeing a lot of creativity, and I know malls are basically ghost towns, so
Yeah,
they're having to get creative.
Malls weren't doing so great before. A lot of in certain locations they were doing pretty well, but one company is called Simon Property Group, and I think they're the biggest mall owner in the country. But now there's rumors that they're not only buying up some of their tenants or thinking about buying their tenants, but now they're using some of that. Amazon is coming in and converting malls into fulfillment centers. So it's still retail space, but it's, as things go to Amazon and, convenience, people ordering from home, they're converting a lot of that space into, Amazon warehouses.
Yeah.
So, pretty.
I know Simon is the elephant in the room there. Anytime you buy a REIT index, you're basically buying, the whole REIT or the real estate investment trust market. Simon is usually 15% of that. I think anything else you had to cover there?
No, I mean, I think I was, the other one was Apple.
Oh, yeah.
And I had a discussion with someone last week where we were talking about, how does it work out well for Apple? How does it work out bad for Apple? Well, you can make either of those two things are possible, but the biggest threat, and we've talked about this before, is regulation. And so people who are watching this probably know what Fortnite is or have heard of Fortnite. Fortnite is sort of this, it's called a battle royale game where basically kids or adults go online and it's this universe and you can sort of run around and you can spend money within the game. And the company that owns Fortnite is called Epic Games. And what a lot of people don't know is that the money that's spent in the App Store, Apple takes 30% of those dollars.
Incredible.
So it's a pretty high fee. Well, Epic, since it's so popular, decided that they were going to give their users the option to go to either pay through Apple or save 20% and just pay Epic directly. And so Apple banned them from the App Store, and then Epic sued them. And I think it's something like 1 billion devices had Fortnite installed. And then probably in one of the best commercials I've seen in a long time, Epic released this commercial.
Today, we celebrate the anniversary of the platform unification directives. For years, they have given us their songs, their labor, their dreams. In exchange, we have taken our tribute, our profits, our control. This power is ours and ours alone. We shall prevail.
So whoever does marketing for Epic, did a pretty good job with that one.
But in some ways, I think that's a really important video because it just shows sort of the struggle against the juggernaut that's big tech, and that struggle won't end with smaller companies kind of feeling their foot on their back. It's going to be governments that are going to be getting entangled, and we've seen some of it already. So,
right.
And I think
a lot of smaller apps and companies sort of jumped on the back of Epic, right? Epic has a lot of leverage because it has a lot of users and it's wildly popular. You were saying, your kid wants to play it. I hear, I don't play it. I don't know what it's about, but yeah, it's pretty interesting to see things come full circle.
Yeah. So, and as we see, all of these kind of, I guess you'd call them kind of losers in the big economy, or at least the struggle, something we're seeing now is anyone who is looking for income out of their investments. I mean,
which is a lot of people.
Which is a lot of people, at least from a portion of their portfolio. That's a real struggle today with interest rates as low as they are. And, the Federal Reserve just had a meeting today and basically said that they don't foresee, increasing interest rates for many, many years to come. So, looking for income in markets is something I think that there's kind of a mad rush for that now. We just saw, kind of speaking of these companies that, didn't fare well in a COVID era, you look at airlines. So
yeah.
we just today saw the biggest single debt issuance of any airline ever, and it was $9 billion from Delta Airlines. And so this debt will pay 4.45%. They originally issued about $6 billion, but it was so massively oversubscribed, people desperate to get that 4% from a company that has lost, half its revenue, and the forecast for future revenues is very uncertain, and people are desperate to lend them their money and receive a 4% return. In normal circumstances, if you're lending your money to a company whose future cash flows are that uncertain, you're going to demand a bigger yield than 4%. But that's the world that we're living in. So I know that one of the concerns of the Federal Reserve, and one of the risks that it's going to have to manage going forward, is as people go and try and seek either higher returns or higher yields from their investments, there'll be some misallocations of capital, basically capital that should have been in a safer environment that was trying to seek a home that is too risky. So, but interesting environment we're in.
Yeah, because I was trying to remember a couple of years ago, you'd probably consider Delta Airlines right now high yield or junk bond, right? Something that a company doesn't have great prospects. And what was that? What was high yield just a few years ago? Probably as a whole was closer to 6-7%.
So the average spread over treasuries, like the amount you get above a treasury yield, is usually something on order of 5.
Oh, yeah.
So 7-8% is probably what you would have received over the last 10 years.
Yeah, it's pretty crazy.
It is. It is. All right. Well.
All right. Well, we'll keep this one short. Yeah. Till next time.